Ladies and gentlemen, good day and welcome to the Sportking India Limited Q2 and H1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Devansh Dedia. Thank you, and over to you, Mr. Devansh Dedia.
Thank you, Zico. Good evening, everyone. On behalf of Sportking India Limited, I extend a very warm welcome to all the participants on Q2 and H1 FY24 financial results discussion call. Today on the call, we have Mr. Munish Awasthi, Chairman and Managing Director, Mr. Sandeep Sachdeva, Chief Financial Officer. Short disclaimer before we start this call. This call will contain some of the forward-looking statements which are completely based upon our belief, opinion, and expectation as of today. These statements are not a guarantee of future performance and involves unforeseen risks and uncertainties. With this, I now hand over to Mr. Munish Awasthi, sir, for his opening remarks. Over to you, sir.
Thank you, Devansh. Thank you so much. And good afternoon and welcome to all the participants for this earnings call of Sportking India Limited. This being our second ever earnings call, let me take this opportunity to provide a brief history of the company, since there may be many participants joining us for the first time. So Sportking India Limited was incorporated in year 89 by late Shivraj Awasthi, and company diversified its activities with the installation of 6,000 spindles in Punjab for manufacturing of synthetic yarns in 1993. So as a value addition exercise, the company commissioned in the year 2000 a dye house, in-house dyeing of a synthetic cotton fiber yarn with an installed capacity of 20 tons per day. So over the last 30 years, your company has gradually enhanced its capacity to now almost 3,779,000 spindles as of now. Company increased their total spindle count by 35% during last year in two phases, which was first phase of 40,800 spindles and second phase of 63,722 spindles. Second phase also got fully integrated in the current quarter, that is quarter 2 financial year 24. We also undertook a captive power generating solar rooftop project. Of the planned 25 megawatt, more than 22 megawatts have already been operationalized, with the remaining coming online within next month. This was a brief journey from incorporation to this day. As you see, we are Sportking have 3 state-of-the-art manufacturing facilities in Punjab, with the benefit of our capability being concentrated at a single location, which provides us a good vantage point to ensure our operations remain efficient. This is corroborated by the fact that we have one of the best utilization levels in the industry. Our product portfolio involves 100% cotton yarns, polyester cotton blended yarns, dyed yarns, acrylic yarns, as well as some fancy yarns. We work with the focus on sustainability and self-reliance. Our products have historically been accepted as leader in whichever category we work with, and we have a substantial presence in export markets with countries such as Bangladesh, Europe, and China being our prime destination. Over the years, we have expanded our export base to more than 30 countries around the globe on back of our focus on quality, supported by a dedicated sales and marketing team. The steadfast commitment towards consistent producing premium quality yarns has earned us many marquee customers, both domestically and internationally. As a recognition of our export performance, Ministry of Commerce and Industry has upgraded our status to 4-star export house in last quarter. So this is the brief introduction about Sportking. So now I would come to the present scenario. So present the demand side, the demand has been very challenging for last 6 months and continues to remain so. Exports have had some bump up for last 6 months, initially led by Chinese demand, and recently demand from Bangladesh. Domestic demand has been very, very tepid for last 4 and 5 months, very surprisingly. So basically demand has been up and down with exports and domestic taking turns in getting better or worse. Synthetic and blended yarns have been particularly bad for last quarter as it's mostly dependent on domestic market, which has been very bleak for last 3 months. The outlook continues to be challenging. A lot of hope is hinging on the upcoming festive season. Geopolitical issues continue to cast a shadow on business sentiment. Pipelines are getting empty, but retailers don't seem to be in any hurry to fill them up. Confidence is lacking amongst the retailers, and they are wary of making long-term commitments. But there are some positive sides. The cost side is very supportive. After a long hiatus of almost 18 months, cotton prices have come down very sharply to a level of 56,000 per candy, which is competitive with world prices. The freights have come down to pre-COVID levels everywhere, and some destinations even lower. Pipelines are extremely dry. At Sportking, we are prepared to take this advantage of any surge in demand whenever it comes, as we have worked a lot in being more cost efficient in the last couple of years. In particular, Indian spinning mills will definitely benefit the most when the demand comes back, as competing countries are grappling with various challenges like uncontrolled inflation, much higher interest rates, dollar shortages, etc. This fills us with optimism for the quarters ahead. So we are in a good position to cater to the upcoming demand. So I'll hand over the call now to Mr. Sandeep Sachdeva, who will take you through the financial performances of the company.
Thank you, Mr. Awasthi, for handing over the call to me. Good afternoon, everyone. First of all, I'm pleased to announce that Sportking India Limited achieved its highest ever revenue from operation of 628.30 crores, up 13.8% year-to-year and 16.6% on quarter-to-quarter basis. Share of exports to revenue was 52% as compared to 47% in the previous quarter. The gross profits stood at 117.9 crores, up 6.8% on Y-to-Y basis and stable on a quarterly basis. EBITDA for the quarter was 39.6 crores with the EBITDA margins of 6.3%. EBITDA margin declined about 260 bps on Y-to-Y and about 290 bps on Q2 basis. Profit after taxes was 15.5 crores with a margin of 2.5%. That declined by approximately 14.7% quarterly basis, with the exceptional item in Q2 FY23 screen comparison on Y-to-Y basis. Cash flow from operation gross of tax payment of H1 was rupees 20.5 crores. Cash flow from investing activity was minus 37.5, and due to the majority of cash were used for capitalization oblique payments for the purchase of plant and machinery. Cash flow from financing activity was 13.9 crores. Major impact due to payment on account of buyback of shares and proceeds from the debt. Debt to equity ratio increased from 0.53 in March 23 to 0.68 in September 23 on account of the higher borrowing, but still remain comfortably within our limits. Current ratio remains healthy at 2.6. Thank you all. And now I request moderator to open the floor for question and answer sessions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Jatin Damania from SVAN Investment Managers. Please go ahead.
Thank you, sir, for an opportunity. So just wanted to understand, sir, you said that on the costing front, there's a positive scenario which will help us in the coming quarters. But can you help us in understanding the increase in the new supply, the new crop competing season, how do you see the raw material scenario playing for us and the industry and operating margin trajectory for Sportking?
Hello, Jatin. Thank you for the question. So, the raw material prices, of course, for last 1.5 years, they have started their journey from 110,000 per candy to a bottom now, which we feel is very close to the bottom of the bottom, that is 56,000 rupees per candy. And definitely, if you compare it with the world prices, which are hovering around 82-83 cents, plus the freight to get them here, we are pretty competitive. And we feel the balance sheet, the Indian cotton balance sheet is pretty loose right now. We feel there was a good opening stock of cotton to the tune of 45 to 50 lakh days, which is equivalent to almost 45 days of consumption. And vis-a-vis last year, which was almost half of it. And the new crop started coming in. Already we are seeing much more arrivals than per day arrivals than last year, and we expect that the Indian cotton balance sheet will remain to be loose for next 6 to 8 months, and we are very positive on that. About the spreads, definitely the spreads have gotten a little better for cotton, 100% cotton yarn lately, but they cannot go substantially higher till we get the sustained demand from at least 2 to 3 markets. So we are just waiting for the markets to, for those markets to show some demand, some traction. Because right now we are just, oscillating between either India is doing well or China is doing well or Bangladesh is doing well, but at no point all the three markets are doing well, which are the major consumer of our yarn. So we are cautiously optimistic that this festive season should get some demand and hoping for better margins in the coming quarters.
Sure, sir. I appreciate your answer, sir, but can you help us? What was the average spread in the last quarter and the average realization for the yarn?
Yeah, the average realization in cotton yarn, 100% cotton yarn, was around 107 rupees, the spread.
Average spread?
The average realization, average spread was 106 rupees 50 paisa to be exact.
So, so now since we have already incurred the CapEx and our capacity is more than 35% growth year on year, as a company, are we envisaging any other CapEx, or the CapEx cycle is almost over for us?
The CapEx cycle is over for this round, so we are not planning anything in foreseeable future. We are just consolidating and riding through this. Yeah, right now we don't have any plans for this year and for the next year also. For next 18 months we don't have anything in plan.
And the last question from my side is one on your power front. Since we are installing 25 megawatt solar power plant, of which 2 megawatt is already operational. So can you help us in understanding what is the ballpark saving that we'll be getting it with the commissioning of the entire 25 megawatt?
22 megawatt is operational, not 2. Only 3 is left. So the average saving is around maybe around 1%. About you can say about 0.5% or more than about 17-18 crores to be precise in today's power price.
17-18 crores annually that will be getting it from this year, right? Sure, sir. Thank you, sir.
Next financial year we will get it. This year we are getting it partially because there's still a few still not fully operational. So about 15% capacity is still left.
Sure, sir. Thank you, sir. I'll come back in the queue.
Thank you. Our next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Sir, can you tell us the capacity utilization in the quarter 2 and the volumes?
So the quarter 2 capacity utilization was almost 96%. The volumes in cotton yarn were 12,100 tons, and in polyester cotton yarn around 7,000 tons, and in total around 20,740 tons as compared to 18,455 tons in last quarter.
Last means quarter 2 last year.
This year. Q on Q, there is a growth of almost about 2,000 metric tons.
So quarter 1 was how much you said? 19?
18,455.
Okay. And 2740. Okay.
27.
And this capacity utilization that you're calculating is on the 378,000 ton, right? The 378,000 spindles.
So the last 60,000 is a little lower for this quarter. So this I'm talking about 310,000. We did about 96%. The 63,000 we did around 75%. But right now it is working at also at 97%.
No, I'm just asking this 96% utilization that you calculated. You calculated on what?
So we calculated it on the
Pro rata.
We calculated it on 320,000 spindles.
Okay.
And the 63,000 spindles which was commissioned in this quarter, last quarter, which was partially left, there the capacity utilization was around 75-78%, which is now at full capacity, 96% as well.
Okay, and to one of the question you were mentioning about average spread at 106 per kg.
Yeah.
Can you tell us the spread for quarter 1 and also how the cotton yarn price realization has moved in between the 2 quarters?
So last quarter, the spread was around 118, and the cotton yarn prices were around, average price for us was 297, and the average cotton price was around 178. In this quarter, the cotton fiber prices was almost around 176, and the cotton yarn prices was 282. So the spread has come down by almost 10 rupees.
Okay. Okay. Thank you very much, sir. Yeah. But sir, just one thing. Why has the cotton price moved up QOQ, where the bale price actually came down? 170 and 176 you mentioned.
No. It has come down from 179 to 176 because because in July, August, September we generally carry the stock from last year, so there is not much fluctuation. The new crop starts coming from mid-September only.
And that crop is at what price?
So right now the current price is 152.
152.
154, around 154.
And has the corresponding yarn price corrected or?
Yes, it has corrected, but not by that much. So it is around 270 right now.
Okay. So we'll see basically about 10 rupees per kg improvement.
No, it depends because these are the prices now. They were not what. So going forward, the sales we are making now, there is some improvement, but it might not be in the whole quarter.
Okay. Thank you very much, sir.
Okay.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Varun Gajaria from Omkara Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So, largely, industry-wise, we heard the commentary that things will get better in the second half of FY24. So how do you see that panning out? Because it seems like from the commentary you've given, it seems like there is still a lot of demand glut overall. So how is that going to pan out?
So I think we all have been waiting for things to improve, but we don't see anything substantially concrete right now. As we know that all the festivals, because the Indian demand actually has been the biggest drag on our bottom line and top line. As we know that all the festivals are a little late this year now. So we still have our hopes that the things will start getting better in the next 15 days. There is slight uptick, but it's not very substantial. So we keep our fingers crossed. But right now, we don't have much visibility of improving demand.
Right, and the same visibility goes on the export front also, I believe, the inventory-wise at apparel end.
Export markets have been slightly better, not mainly because of increasing demand, but because of supply issues in some countries, because the spinners in some other countries are hurting even more. So there has been some uptick in demand from Bangladesh because some capacity there was shut down. So, but we don't see a lot of traction from the retailers, not much visibility. I think the business climate, the business sentiments continue to be bad because of geopolitical issues and higher interest rates and inflation. So the demand still remains to be a challenge everywhere.
Right. Okay. Okay. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Ankur Dheer, who's an investor. Please go ahead. Mr. Ankur. Mr. Ankur, your line has been unmuted. Please go ahead with your question. So the line for Mr. Ankur has dropped. Maybe move to the next question, please. Our next question is from the line of Rahul Chen. Please go ahead, sir. Who's an investor?
Hello. Am I audible?
Yes, sir. Please go ahead.
I had a question. In the last call, you had mentioned there will be a constant increase in the value-added share in our kitty. So what the steps are we planning to take in this regard?
So we are doing a lot of things on that. So so it takes some time. So we are doing many steps in adding to our value-added kitty. Our portion of our sustainable has slightly gone up. So these endeavors, of course, take a little bit more time than just 3 months or 6 months. So we are onto it, and we are slowly and steadily working on it. And there is some, I think, 2-3% uptake in our value-added yarns in this quarter, and we expect to slowly and steadily take it up.
Okay. So my second question is, you have given a list of market clients. So are these strictly export-facing, or do we also supply to these brands locally?
No, we do it. We do supply to them locally as well, but mostly in exports.
So follow up on that, which local garment brands are our major clients in the domestic market?
I think we'll keep. We can answer to this question privately. So we'd like to keep it, within the company. So
Okay, not a problem. Thank you.
Thank you. Our next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello. Good afternoon, sir. Yes. Although you've been sounding a bit
off when it comes to demand, but you're still optimistic about the festive season and all. And you don't have much visibility, but can you at least say that you do have visibility about continuing this run rate? Because you've grown more sequentially than you've grown year on year in this quarter. And now I understand that things are not looking good when it comes to demand, but given just the general scenario which you have seen in quarter two, can it be continued in the remaining quarters in terms of top line and margins?
Yeah, that's a nice question, Sahil. So see, top line is something I think we'll be able to manage, because being a little bit more cost efficient and our price points are a little lower when it comes to deciding whether to operate or not to operate. So we think we are pretty confident of keeping up to the run rate of the quantity produced. I think it'll be slightly higher this quarter than the last quarter, because most of the sprinters are working at full capacity now. So we are pretty confident on that. But the margins is something which is up in the air right now, and we expect to at least maintain what we have given in last quarter, and maybe slightly go better than that in current scenario.
Okay, sounds good. And the second question, so other than waiting for demand to improve and the prices as well, so which would aid margins, other than that, what other key strategies you are taking as a company to widen our growth prospects? Any other key developments that you'd like to outline?
Right now, it's more internal looking. So we are looking at where we can cut down on the cost and how we can become more cost efficient. From marketing point of view, we are trying to explore some more markets, some virgin markets which pay you a little more. So this is an ongoing exercise. So this we keep on doing every quarter, every month. So, and the foremost is internal looking right now because of new capacity which has come on board. It's been 1 year since we have been undergoing these expansions. So now we are trying to see how we can cut costs and still make maintain the same utilization levels. So this is an ongoing exercise, which is so we expect to cut our costs by at least 100 basis points in the next 6 months with all the activities we are doing. Yeah.
Okay. And lastly,
and of course, this our investments on solar, which I think is also going to pay next year onwards fully to reduce the cost. Yeah.
Okay, perfect. Just lastly, quick one. You said you will be trying for new markets as well. So does this also include the exports? So new regions or anything like that?
Yeah, mostly exports. Because domestic, we are doing it already. We are almost in every, which is geographically advantageous to us. And I was talking about exports mainly.
Okay. All right. Looking forward. Thank you and all the best.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Ankur Dheer, who is an investor. Please go ahead, sir.
Hello. Thank you for giving me an opportunity to ask my question. So my question is with respect to the power and fuel expenses, which have been hampering since many quarters. So is there any expectation that from next quarter onwards we will see marginal decrease in the expenses in fuel costs and all?
No, the fuel cost, the expenses have gone up because the capacity has gone up. Our fuel cost remains almost to the same level as it was last year. So the major bump up is only because of the new capacity addition. So there's a very small increase very small increase in the price of the power as such.
So do we expect the same kind of expenses could be incurring in the next quarter?
So this quarter, the expenses will be, the same or maybe marginally lower because in winter season, the power cost from the State Electricity Board is a little lower. So we expect the same to almost a little lower because the solar generation goes down in these months. So we expect it to be same or a little bit insignificant, by insignificant amount, a little lower.
Okay, thank you. And my another question is with respect to the meeting which happened recently with Bangladesh counterpart. So is there any activity going on or any kind of is there any kind of deal which is going on with Bangladesh counterpart with respect to the exports or imports or something like that? Is there any update on this?
No, sir, that was just a courtesy visit, and we keep on meeting. It was just in news this time around, but we keep on meeting these people every month or 2 months, and these are ongoing marketing exercises we do, and nothing to read much about it.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Sahil who's an individual investor. Please go ahead. Mr. Sahil, your line has been unmuted. Please go ahead with your question.
Am I audible?
Yes, sir. Please go ahead.
Yeah, thank you. Thank you for the opportunity. So, I have a couple of questions. The first question being, sir, if you can share the nature of our borrowing, as I can see that it has risen. So, please, if you can share the nature of our borrowing.
Okay. So, it's there in our results, actually. So, our long-term borrowings have risen from 335 crores to 411 crores. And this, of course, is because of the new expansion coming on board, the solar plant as well as the 63,000 spindles. Our short-term debt has bumped up by just 20 crores in spite of, almost producing, 10% more production this quarter. So, yeah, so this is the amount of debt, and these are the reasons I gave you.
Okay, sir. So just a follow-up question to this. So, sir, like what is the timeline that you see for paying this debt down? Like, since as you said that no new CapEx is planned.
So this debt is a long-term debt. So this debt is we have to pay it in 7 years. So we intend to pay it in 7 years. So that's the plan.
Okay, yeah. Thank you, sir. Also, sir, if you can share, if you can see, like, how do you see like your export contribution panning out in the upcoming quarters?
Export contribution, I mean, that's like export contribution. So this quarter we exported the last quarter we exported around 52% out of our of the share was in exports, and we expect this share to remain constant or maybe go a little bit higher in this quarter, maybe by a couple of percent points.
Mm-hmm. So, sir, more than 50 or less?
More than 50, yeah. I think it will remain in the ballpark of 50 to 55%.
Okay, sir. And sir, like just a follow-up question to this as well. Like, like as you see, as you said that we have seen that ready-made garments export declining, but yarn export increasing as per government data. So, like, what do you think that current domestic scenario? What do you think about this?
So the export has, of course, risen in last 3-4 months of yarn, but that was, we are comparing it to a very low base last year, because last year the prices, the export has totally crashed. So this year the exports have done better for last 3 months, and they are more than what is the average needed to balance the domestic supply. So exports have been good for last 3-4 months, but domestic demand, of course, has not been much evident in last 3 months. But as I said in my opening commentary, that we expect this festive season to keep this demand cycle up, and to see, and then I hope after Diwali we will see some demand coming, domestic demand also coming.
Got it, sir. Thank you, sir. Thank you for the perspective.
Yeah.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, that was the last question of our question and answer session. As there are no further questions, I would now like to hand the conference over to Munish Awasthi for closing comments.
Thank you, Divyash. I would like to thank the participants for taking out the time to join us for this call. We look forward to having continuous engagement with all the market participants. And I wish you all of you a very happy Diwali and a New Year, as we'll be talking in the next year now. For any other queries, be free to contact with Orient Capital, our investment relations advisors. Thank you.
Thank you. On behalf of Sportking India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.